Okay guys, so I'm going to go over like a minor impulsive leg example and a full impulsive leg on the chart. So I found actually a perfect good example on GBP USD, and I'm going to show you guys exactly what I mean by this. So as you guys can see that the market was trending lower, and then we had a market structure break. So the structural break came for me on this impulse move right here. So if we go check from point A to point B, this push in here broke the last significant bearish push down. So this leg in here all the way down was created off of that swing high down to that swing low. Now there's a reason I really like this specific market structure break, because it actually took out all this liquidity pool down here. And as you guys know, as I said before, I consider market structure break off of a very key significant level. And for me, one key significant level, if it's not like some sort of supply or demand level, is if we get a market structure break after we clear liquidity pools. Now the liquidity pool section is coming up, but it just kind of like a little bit of a teaser, and I actually will come back to this example because this example had so many things going for it in terms of a liquidity pool play. But for right now, we're going to just focus on the market structure break. So we have our significant swing after clearing liquidity pool, or after coming out of support level, whatever you guys want to call it. So when we go down to the M15, I see this structural point in here as well. So we know that this point here from point A to point B, this is going to be our full impulsive leg. Now the minor impulsive leg is going to be, I would consider my minor impulsive leg from this low to this high right there. So I'm going to make a double so it's a little bit darker, maybe one more just to make it a little bit darker to differentiate from this. Now the reason why I personally prefer this type of minor impulsive leg is multiple things. If the minor impulsive leg from here to here gets hit in an aggressive market, I will typically take that into consideration. Also, if the minor impulsive leg, let's say when you draw our Fibonacci play from, let's say from here to there, we get our perfect retracement. Two things that you guys can do over here. It can either wait for some sort of confirmation entry, which we will talk about in the curriculum, or you can kind of buy this area if it comes into a kill zone. So if we get our retracement right inside of the heart of our kill zone, which we're going to talk about in the next couple of videos, then it's going to be a very, very good opportunity to kind of get in. Now, the way I personally play it is off of like those two scenarios, or if let's say we had a major rate of some clear liquidity pool like this is typically when I'll focus on a minor impulsive retracement, because I don't anticipate price coming back down too low, because once stops are rated, they're going to look for upside objectives. And again, we're going to talk about that more into the liquidity pool section. So I want you guys to just keep note of this, and we're going to use the same exact example once I start talking about liquidity pools, because this example is going to make so much more sense on why I would use this minor impulsive leg versus sometimes waiting for the full one. But yeah, I just wanted to go ahead and cover this example and show you guys in the real chart form how the difference of the minor impulsive leg, which would be this low to that high that broke the structure, versus the ultimate low to the high that broke the structure, because this will be our full leg, this is our minor impulsive leg. So just want to go ahead and show you guys this example, and we're going to go into much longer depth into this example once we start talking about liquidity pools.